Good morning, everybody. It's Thursday, February 6th, 5:25 a.m. Central Time. Grain markets are higher across the board this morning. March corn futures up 1 3/4 at 4.95. March soybeans up 9 cents at 10.66. March Chicago wheat up 3/4 of a cent at 5.73. March Kansas City wheat up 1 1/4 at 5.93. March spring wheat up 1/4 cent at 6.18 1/4. Let's start off with Argentina.
So, rainfall returned to Argentina this week. The nation's key farming areas received the much needed precipitation on Tuesday and Wednesday. The rainfall was especially beneficial for the soybean crop, which had been struggling with recent hot and dry conditions. The rains were heavier and more widespread than predicted, with some areas receiving rain totals exceeding 3 inches. Rainfall will need to continue in the coming weeks to avoid further crop losses.
I would venture to say that this is part of the reason, at least, why the soybean market was down yesterday. The rainfall in Argentina over the last couple of days, February 3rd through 5th, which is Monday through Wednesday, was focused mainly on Buenos Aires, which is 31% of soybean production in Argentina. So it's substantial. But Cordoba, Santa Fe, areas further north missed out. And all of those areas have been dry. So I don't know necessarily that this rain event was a game changer. It is helpful to crops in the southern corn and soybean areas, but certainly not widespread enough to be a game changer. Looking at the forecast, the 1 to 5 day is very dry, and then this morning's Euro model projecting rains to return during the 5 to 10 day period. It's been awfully dry in Argentina over the last 30 days. I think they may need more than this. I still think you're going to see production estimates reduced. This is a good map from our friends at Crop Profit. This is the 15 to 28 day Euro, which is calling for mostly normal rainfall across Argentina. I still wouldn't be surprised to see lower production estimates forthcoming just based on previous dryness.
China filed a WTO complaint against the U.S. on Wednesday. The complaint comes amid Trump's new 10% tariff on Chinese imports. China said in the complaint that Trump's new tariffs, which are aimed at halting drug flow to the U.S., were imposed on unfounded and false allegations. As of Wednesday, there had still been no phone call scheduled between Trump and China's President Xi. Earlier this week, China responded to the U.S. tariffs with its own targeted tariffs on U.S. imports of coal, natural gas, crude oil, farm equipment, and an investigation into Google.
There isn't really anything new here aside from the official WTO complaint, which I don't think means very much. The two big take homes for me, one, there hasn't been a phone call, but two, China has not mentioned soybeans or agricultural products as part of its tariff retaliation plan. And until they do, I think the grain markets and large money managers, whoever it is, I think they still feel okay about being long the bean market, long the corn market. So I guess it's kind of a wait and see situation. We've got some more China news.
We sure do. The nation has postponed or diverted wheat imports due to ample domestic supplies. Roughly 600,000 metric tons of wheat, primarily from Australia, has either been delayed or redirected to alternative buyers. China currently has an abundant wheat supply due to last year's bumper crop. As a result, domestic prices have declined, prompting China to delay wheat imports until late April. The nation's declining demand for wheat may further pressure the already struggling wheat market. China accounted for 6% of global wheat imports last season.
I cannot make heads or tails of the China wheat supply and demand situation. Same thing goes for corn. They have an outrageously large amount of wheat on hand, if USDA's number is correct. USDA projects Chinese wheat ending stocks at 133 million metric tons. Okay, that's one way to view it. Stocks to use ratio is a better way to view it. Chinese wheat ending stocks to use ratio, the projection for this marketing year is 88%. That means for every 100 bushels of wheat that they use, they're going to have 88 left over at the end of the marketing year. Just to put that in context, that would be like if we had a 13 billion bushel corn carryout in the United States, whereas we're actually going to have a 1.5 billion bushel carryout. So I can never look at these charts and say, oh, China needs to buy wheat or China doesn't need to buy wheat. They're just outrageously high supply. They like to keep large grain stocks on hand. So this doesn't lead me to really any sort of conclusion. China says they don't need the wheat, but I've always been told listen or watch what they do and not what they say necessarily.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our recent premium videos?
The natural seller is absent from the old crop corn market to some extent. Matt Bennett was on yesterday, and we did 20 questions with Matt, which was actually, I believe, 32 questions. Great stuff that came in from our premium subscribers, everything from grain marketing, old crop, new crop, basis, spreads, weather situations, all sorts of different questions that were answered. Matt's great. We do this once every couple of weeks. Steve Johnson was on Tuesday. We did 2025 crop insurance decisions. If you guys are looking for some outside or third-party guidance or just opinions, Steve laid out all the scenarios, ARC, PLC, SEO, ECO, all of the add-ons. He had some really great graphics to kind of support his ideas, and we had did a mailbag here as well. Subscribers sent in some really good questions. If you guys want to see the premium stuff, go to standardgrain.com. You could sign up this morning. It's a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. You get 2 emails per day from us. There's one at 5 a.m. Central Time. That's the big one with all of our charts, graphics, 6 most recent videos. The 10 a.m. email blast is that day's premium video. You can jump on our text message service if you want. We're never going to call you. We'll talk to you if you want to chat via text or email. And that's it. You get all my cash grain marketing recommendations broken down by crop year, and percentage. Piece of cake to sign up. Takes about 30 seconds. We do Apple Pay, Cash App, Google Pay, credit card, whatever you want to do. You can do it on your phone in about 30 seconds. Give that deal a shot this morning, guys.
The Trump administration will unveil a plan to end Russia's war on Ukraine next week. The plan could potentially put the conflict on hold and leave Russian-occupied territory in a state of uncertainty. It would offer Ukraine security guarantees to prevent Russia from striking again. Trump has proposed obtaining access to Ukraine's rare earth minerals in exchange for U.S. support. The administration is advocating for Ukraine to hold elections once a ceasefire is established. Long term, Ukraine would like NATO membership to guarantee security.
This could have implications for the wheat market. So wheat futures have trended lower for 2 years while this war was ongoing. My thesis as of right now is that if the war ends, it could actually be supportive to wheat prices, which I know makes no sense, right? So we had the initial spike on the Russia-Ukraine war in 2022, but we've done nothing but trend lower since then. We're basically back to pre-COVID levels in some of these wheat contracts. I think Russia has been selling wheat at artificially low levels to help fund the war machine. And when there is no more war machine to fund, maybe they elevate their wheat prices, thereby elevating global wheat prices. I can't come to any other conclusion. I'm not going to say it's bearish. I mean, we've trended lower for 2 years while the war has been ongoing. So I'm going to say that the opposite might actually be friendly in kind of a backwards way.
The US dollar declined against most major currencies yesterday as trade war concerns subsided. The Bloomberg Dollar Spot Index declined by as much as 0.4%, falling to its lowest level in more than a week after hitting a 2-year high on Monday. Trump's announcement earlier this week to postpone tariffs on Canada and Mexico has shifted traders' outlook. Traders believe Trump is using tariffs as a negotiating tool rather than aiming to start a full-blown trade war. Also earlier this week, the release of weaker than expected U.S. job numbers increased bets on interest rate cuts.
The dollar has been strong, generally speaking, since the middle part of 2024. It has been soft this week because of the tariff news. As we mentioned yesterday, the tariff news can move very fast. For now, it seems like kind of, the tariff risk is off the table and we've got a pause, but that could change very quickly. The currency pair that you guys may be more interested is the US dollar Brazilian real pair, and the dollar has lost ground versus the real for this would be a 6th consecutive week. And this is a very good thing for U.S. soybean growers and a bad thing for Brazilian soybean growers. A stronger real versus the dollar is good for U.S. soybean growers because it makes Brazilian soybeans more expensive in international markets and will give U.S. farmers a competitive edge. That being said, U.S. beans are still overpriced on the export market. Brazil's got a monster crop coming, but this is helpful in a roundabout way, certainly.
Bunge's profits are expected to drop to their lowest level since 2019. The anticipated decline is due to concerns that President Trump's tariffs may incite a trade war. Additionally, abundant soybean supplies and a lack of tax credit guidance for renewable diesel production have weighed on profits. The announcement caused the company's shares to decline by nearly 7% on Wednesday. Bunge's recent acquisition of Viterra will make it easier to purchase crops worldwide, helping the company deal with any trade disruptions. Canadian regulators recently approved the $8 billion deal, but it still awaits China's approval.
It's been a rough go at it for your commercials or multinationals. This almost looks like the ADM chart that we showed you guys yesterday. Lowest trade since February of 2021 for Bunge. So things not looking so good for them.
U.S. ethanol production was strong last week. Weekly output of 1.1 million barrels per day was up 9.6% on the week and up 12% compared to the same week last year. Ethanol stocks were pegged at 26.4 million barrels. The print was up 2.7% compared to the previous week and up 6.8% versus the same week last year. Implied gasoline demand was up slightly compared to the previous week and up 2.3% versus the same week last year. On average, over the last 4 weeks, implied U.S. gasoline demand is up 1.3% compared to the same period last year.
That's a strong, very strong production number. That being said, ethanol margins are not great. I was looking at some Reuters data this morning. Margins for most ethanol plants, when you use spot prices of corn, ethanol, DDGs, inputs, they're break even to negative. But they'll continue to grind corn for ethanol even with break even to negative margins. We don't want them to get too much worse.
We had another flash sale of corn yesterday. U.S. exporters sold 13 million bushels of corn to Mexico for delivery during the next marketing year. The sale occurs just days after Mexico reached an agreement with President Trump to temporarily suspend tariffs for the next month.
And that's a new crop sale, 25-26.
Yep.
So here we go. We're getting started. And this is the time of year, February, March, where you're going to see global buyers. You're going to see Mexico start to buy new crop corn. You're going to see China they haven't done it yet, but they're going to start to buy new crop soybeans fairly soon, assuming that there's no big trade war or escalated trade war. What did cattle do yesterday?
Cattle futures rebounded. Live cattle were $1.72 to $2.67 higher. Feeders saw gains ranging from $2.47 to $3.02. Box beef continued to decline yesterday. Choice was down $5.39 at $3.25.34, and select was down $3.08 at $3.14.33.
Outside markets fairly quiet this morning. U.S. dollars up. The stock market is about flat. Bonds are about flat. Crude oil is up 58 cents in the March WTI at 71.61. Have a great day, guys. We'll be back on Friday.